You've probably heard me championing family trusts here at Paris Financial, and so I thought I'd tell you a little bit about family discretionary trusts. So these asset vehicles started way back in the 11th and the 12th century at the time of the Crusades, and the King of England used to try to get as many knights as he could to back him up right behind him and head over to the Middle East and see if he could conquer some things over there. Times haven't changed too much, have they? Anyway, his knights often owned real estate, and they owned other possessions as well. And so the knights, to stop those assets going to the king if they got speared over there in the Crusades, to stop that, they were allowed at the time to put their assets, etc., on trust. And that's what they did at the time, and that's where all these laws started around trusts way back in England in the 11th and the 12th century. With family trusts, or discretionary trusts as we call them, they're really made for one family, and there are a number of protagonists involved in a family trust, and I'll go through them with you one at a time now. So it's important when you're learning about family trusts, you know these protagonists as they are. Here we are here, and the person who starts a family trust is the settlor. So the settlor basically sets up the trust by contributing usually about $10 or $20 into that trust vehicle to start it off, and then the settlor sails off into the sunset, never to be known of again. So basically that can't be a family member. We don't really want it to be the accountant or the lawyer. It should be a next door neighbour or someone known to the family, and they simply start the trust. The trustee here is the person who directs the trust, does all the day-to-day decisions. They have power to run that trust. That can be an individual, that trustee, or they can also be the director of a trustee company. This person here is the all-powerful appointor, and the appointor is super important in a trust, and it's quite hidden sometimes, and people don't understand the power of this appointor in a family discretionary trust. So basically, the appointor can sack the trustee and put another trustee in place. So very, very important you know who this appointor is, and make sure they've got a pretty close relationship with the trustee, and often they will be the same person. Then a family trust usually is trading in a business or has assets making income, and before the 30th of June each year they make a distribution minute, and the distribution minute is income coming down to children who are under 18, and in Australia they can earn about $416 tax-free. There's people who are over 18 who can earn distributions from the family trust and pay individual tax rates. And the third form of structure that can earn income off a family trust are companies, and then companies pay company rates. So that is the basic setup, folks, of a family trust. Settlor starts it. The trustee has the power and makes all the decisions day to day on the running of the trust, and the appointor is this all-powerful figure who can sack the trustee in certain times. And down here are what's called the beneficiaries of that family trust. That's the setup of a family trust. We really like our growing small businesses to run trading trusts, which is basically those discretionary trusts I spoke about running a business. That's how they're set up. If you've got any queries, send them into us. But that is a family or a discretionary trust. Enjoy. See ya.